Good afternoon, traders. This is Christian Farmer, Strategic Trade Group, and this is your end of day market recap for Tuesday, March 18th. Turnaround Tuesday, but to the downside today. Not the best price action, certainly after two strong breath days that we had both on Friday and Monday, then a little bit of weaker breath today. And not anything really crazy today in terms of like not much movement. Like crazy, I mean just not anything interesting. I would say it was a fairly dull day today. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving any advice or recommendations. Please read the full risk disclaimer there. So we did get I think the event that I was watching today was Jensen Huang, the CEO of Nvidia, at that conference, just to hear if there was going to be any new major announcements or any breakthroughs or anything like that in terms of AI or their product suite. I am not an expert on AI. I don't pretend to be, but it sounds like they're going to continue to roll out products, over the next year. I think one product is coming out the second half of not this year, but next year. And then something as well for next year too. So, they're going to continue to roll out new things, and they're a good company. But I think overall, I don't know if that excites people to really kind of get them back into the stock. Remember, the stock, previously was pretty overcrowded, and I think a lot of people have been reducing their position, and I think institutions have done that. So I don't know if it gets them to get back involved in the name. VIX was up about 6% today. In terms of the averages, which I'll go through in today's video, I didn't do that yesterday. Not a big move in bonds today. Gold, which made another leg higher today, up 1.2%. So very strong there. And then in the averages, all of them fell from the open. The Qs fell the most, both for the day and after the open. So, there's some problem areas, I think, in the market. Like I said, we had nice 2-day bounce. I think that you want to call that at this point. Here's what the S&P did today. Essentially nothing after, the first hour of the day or first 20 minutes. The market was weak pre-market. At the end of the day yesterday, we gave back some of that buy program that we saw, and then we just kind of trickled lower in the pre-market and then spilled lower, and then just really didn't do anything. So here's what I would like out of the market, right? Because again, we have to choose what we're doing on a day-to-day basis, whether or not we want to be in this market or whether we don't want to be in this market. I would like to see dips being bought. And, I'm not really seeing that too much, other than we know that we got oversold last week. We know that we finally got a little bit of fear in the market. We got the equity put call ratio rolling to the upside for one day. So there's finally like a kind of, I don't want to say like a super washout, but there were some bulls that I think finally threw in the towel, and we bounced. But the question is, after that bounce, to kind of relieve some of that downward pressure, what's going to happen here? And one of the questions that I have in my mind is, like, who's really going to be the leaders? Who's the leadership? We had Ryan Dietrich on this morning on pre-market prep this morning. That's at every day at 8 in the morning till 9. And, I specifically asked him that question. He brought up a very good point to me. And he said, because I said, hey, what, can this market continue to go higher if tech is an underperformer and doesn't really participate? And his response to me was, well, he's like, remember in 2024, tech really did underperform. So, financials were very strong. Now, financials have not really come back since, for what once they sold off. But, I don't know if it's going to be financials. I talked about things like in the financials, like insurance companies doing well, and some of the lower volatility areas, like energy's acting okay right now. There's a few areas that are acting okay right now, but I don't know where we're going to find like really that exciting area of that market right now. So again, sometimes you have to wait and be patient and wait for those things to kind of, crystallize a little bit. But that's kind of one of the head scratcher things that I've got. Looking at the technicals in the S&P, a lot of people talking about, oh, we rallied and we got up to the 200-day moving average or almost to the 200-day moving average yesterday, and maybe that's a little bit of a failure at that 200 or right around that area of the 200-day moving average. I use the simple moving average, but maybe some people use the exponential. But there you have it. And notice that we kind of, we did the other observation was that we got above the 5-period moving average Friday and then Monday, and then follow through on Monday. And now we back tested it. So we've got another day tomorrow where things could change in terms of, what Mr. Powell says tomorrow. Reminder that we've got the Fed decisions tomorrow at 2. Then we have a press conference at 2:30. The press conference is where we're going to get some information about what Powell thinks about inflation, what if that's going down, if what segments of maybe inflation are going down. What about he's going to get a whole bunch of questions about tariffs and are they inflationary and what the impact is going to be, and I don't know if he's going to have enough information to basically make a stance one way or another. So that's what I think. That press conference usually it starts at 2:30 and it usually runs anywhere from 45 to 55 minutes. He's usually definitely done by 3:30. Sometimes he finishes around 3:20. That's usually my for whatever reason I try to game that every every time he speaks. But I think it depends on his demeanor too and what kind of a mood that he's in. But here we are. So this is what I'm watching. And this 561.37 level, this is going to come into play at the end of the week, right? I'm looking at the value area for the year, which comes into play really on the weekly chart. I'm cheating here by looking at two different value areas on one time frame, but that's what I would be watching. And I'd also like to see the price stay above the 5-period moving average. Now, let's take a look at what the Qs look like, because they paint a bit of a different picture, right? The value area is for the year, which is the big block here, the big rectangle. That is the value area for the year. And notice it's pink because the bearish 80% rule, and you could see that on the bottom of the screen. By the way, you could get this indicator on your screens. You could just see my pinned tweet on Twitter, and you can get the link for that. And we do have a trial, I believe, for that, so that you can, get a hang of using this and set these up properly on your charts. But this needs to get above 486.56, or it's the bearish 80% rule, which means once you break into the value area, either from the bottom or the top, in this case, right, where we haven't been in the value area, there's an 80% chance that you're going to go all the way through by the end of the period. Well, what's the end of the period? That would be the year, because this is a yearly value area. And you can see this again, if you go to the weekly chart, you'll see exactly what this means. But this is not showing strength anymore. And I don't know what in the Qs are going to propel. Like, I don't really have a reason to go long the Qs. And I'll give you an example. The biggest names in the Qs, just continue to look weak. Right. I have a spreadsheet here, which I share with members during the day, just levels and what to basically watch. But, this is the Mag 7. I call them Great 8 because I put 8 names in here. But these names, like, and it's not to say like this happens every day, but we've just been getting more days where these names just go down, and they go down a lot. Tesla was down 5%. I get that today. They had bad news because BYD is coming out with a much faster an EV charging station, 5 minutes to charge your car. That's incredible. That's pretty cool. But look at Nvidia, was down 3.4% on that big day today. Meta also down 3.7%. So, if you're kind of looking at saying, hey, I want to buy the dip and in the Qs, ask yourself, like, what areas of the Qs are getting you excited? Because I don't really have any. I think the semis are stuck in the mud. I think and I don't know what is really exciting out of the Mag 7 names. I mentioned I like Netflix. But that got an upgrade, but that stalled at the 200-day moving average too. So Meta, go through a couple of these, just continues to move down. Okay, maybe it will find support at the 200-day moving average, but then what? What's the catalyst? What's the growth engine? Microsoft has been and by the way, once I just want to reiterate this point, names that have bad earnings, and not that the great eight, the Magnificent Seven names had bad earnings, but they certainly didn't have a good earnings reaction. I look for good earnings reactions, and the only ones that did it were, Meta had a good earnings reactions and Netflix. Tesla had a decent earnings reaction because Elon really, pumped up the earnings call a bit. But these names just they don't look good, and they've looked tired for a while. So if you've listened to my videos, you know that this is nothing new. I'm just basically saying that I think that we've got a decent changing of the guards as we've seen a couple day bounce, and I don't like the Q's chart. I have to say right now. IWM that leaked into the value area obviously earlier in the year. That's been the bearish 80% rule has been in effect for a move down to 189. Again, these doesn't mean that these things are going to go straight down. Here we've got a nice bounce here, and price is still above the 5-period moving average. So there could be a whole bunch of different scenarios that play out here, but I would watch the 5-period moving average for now. Once this starts to break lower, then you know that the bears are back and the sellers are back in control. But that's what the indices look like. I would say out of this group, or the major indices, even though the Dow did close back below the 50-day moving average, I mean, I kind of like the Dow stocks here. I think that this is more of a Dow Jones Industrial Average type of market. I don't think it's going to be the AI stocks anymore, or it's not to say that they won't have um, fits and bursts of doing well for a few days, but I just think that that theme is towards the end of it. And again, I'm not saying I have to make sure I say this every time. I'm not saying AI goes away or we're not going to be using more AI. I just think the major growth is already behind us, where we've seen beautiful uptrends in stocks going up because they got involved in AI. I just don't think that you're going to see that excitement in terms of the stock prices anymore. But I could be wrong, and I'll certainly be looking for things. I get more excited about a group when it acts better technically. I get negative about a group when it begins to really slip and break down and break below the 200-day moving average and not come back. Let's talk a little bit about growth versus value, because if you go back to my spreadsheet here, I think like this, so the two big stories that I see right now as we're getting close to the first quarter being done is that value has really outperformed growth. If you look at year to date, value is up 2%, where none of the other indices are, and growth is down 9%. And this is large cap growth, by the way, right? So large cap growth. So looking at growth, it kind of looks like the Qs. Big breakdown, little bit of a bounce, but back below and kind of hanging out down here, and bearish 80% rule. Here's value, right? Again, it's not like I'm not doing backflips about how great this chart looks either, but at least it's trying to get out of the value area. And I've mentioned a couple groups that I think are solid in here. But again, it's still not going to be easy. This is insurance companies, or I actually like this ETF a little bit better. Here's energy, which did get out of its value area, but still I mean, this is such a sideways looking chart. I actually put on, I was looking at both Exxon. Yes, you saw me tweet Exxon that got above its 200-day moving average. And I was looking at this or going long XLE, and I looked at Chevron, and I liked Chevron a little bit better. So I put on a position in Chevron today, but it's just tough. I think that these are tough. And you're really just playing a theme of like lower volatility because oil's not going up. It's, nat gas is doing okay. EQT and EXE, which got a couple upgrades today by, I think it was Stevens upgraded them. They're doing well. But you had to chase this move today because of the little bit of a gap. EXE, which gets added to the S&P on Friday, looks best and best. But look at this candle. Like, do you want to chase this candle? I don't, I don't know. I don't think so. So I mentioned value, which has been doing better, and then of course it's international and EWG. Germany made a new high today. I do have exposure to this. I have Deutsche Bank on, which had a nice move today. I'm looking for Deutsche Bank to maybe get to 26. So you got German stocks doing very well. We know, China, which took a little bit of a breather today, but that's fine. I think you want dips. I think you want dips in some of these groups. Look at the earnings that came out. TIGR, full green bar today, breaking outside of the value area, now above where it was earlier in the year. So that's very nice. TME, 10-cent music. Now they took out a VPOC up here, but they also had earnings. I mean, these names are moving on earnings. So nice. You're getting different names that are showing some strength. Futu, of course, which didn't do so well today. This one I don't have a position in, um, because I have a position in Baba, which I think had an inside day today. But this is where the other story is, or the other theme, really strong theme. So it's value outperforming growth, and sorry, let me just bring this back in here. It's value outperforming growth, and it's international. The fund manager survey was out today from Bank of America. I think I have this slide here. Let me bring it in here. Right, a monthly change in fund manager survey investor positioning. Right, so a lot of investors on the fund or institutional side, I would think we classify those going into European and emerging markets, but by far the Eurozone. And again, think about what's in EWG. It's a lot of more value. There's some growth stocks in there, but it's mostly value stocks too. So in any event, that's what we've got going on. Here's my watch list. I added, I was looking at Cardinal Health. All these names did well today, by the way. All three names that I added to the watch list this morning. Cardinal Health is a very low volatility type name. This name's breaking higher. So this is what the market likes for now. Maybe it changes, but at the present time, this is what the market likes. And I just wanted to show you sectors. I forgot to do this in yesterday's video, but you could see this is just whether price is above the 5-period moving average, the 20, and the 50. If they're above all three, I give it a strength. And you've got XLE, which I mentioned is still a sideways looking chart, but at least it's above these moving averages. You've got XBI that looks weak. You've got consumer discretionary. You've got communications, staples. So communication names across the board, they all are breaking lower at this point. And that's about it. Aerospace is doing okay. But this is the market that we have right now. So tomorrow we're going to get the Fed. Just figured I'd show this again. No, there's no expectations of a cut tomorrow. You could see it's about zero. There's about a 20% chance that they're going to cut. This has been dropping. This was close to 40% about a week ago, about a 40% chance that they're going to cut rates come the next meeting, which is May 7th, but it's been dropping. So I'm not sure why it's been dropping. Maybe we'll hear that from Powell, maybe because of tariffs and something to that effect, or maybe there's something else that I'm just not aware of. So that's the video for tonight. Hang in there. And again, like when you're going through and looking at charts, and when you're, after we've had the correction that we've had so far, you have to ask yourself, what areas do you want to get into? And is this market that gapped down today, moved down today and just stayed down? Is this the market that you really want to get involved in? Or do we want to or do we want to hear something maybe positive from the Fed tomorrow? Personally, that's where I am. I would like to say Powell say he's opening the door on the chances of more rate cuts happening this year. I think that would be very good for the market. I don't think the liquidity is very good in the market right now. Maybe that kind of lights a little bit of a spark to say, hey, the Fed's thinking about easing. So that's what I'll be watching for tomorrow. And if not, it might be just looking at more of these, low volatility areas of the market outperforming. Guys, have a great night. See you tomorrow.